Hello friends, this is Raj Sastry from Raj Option Trading. Today is April 14, 2022. Let's take a look at most beaten down profitable stocks. We'll start with the market update. Let's look at stocks with the volume more than 1 million shares. Let's take a look at stocks with the net positive margin more than 10%. These are profitable companies, and also stocks with the free cash flow more than 500 million and cash on the balance sheet more than 500 million, low valuation and low debt. Market is very volatile. We got to take opportunity and buy some great stocks at a bargain basement price and keep accumulating. That's the way to grow the profit and grow the wealth. So with that, let's jump in. All right, from a fear and greed index perspective, look, we are at 42 right now. We are in the fear zone right now. I can see us coming to around 20 or 25 at least, because market is really looking at what Fed will do, the geopolitical tension, the supply chain issues, oil price. There are various factors here. So that's why I feel the market will come down more from here. I could see us coming to 25 or so. Look, just a month ago, we were at 19. There's a chance we might revisit these levels here. So with that, let's jump in here. Look, from a market perspective, in a one-day chart, look, market is down. It came down, as you can see here. Try to go a little higher, but it came down, tumbling toward the end. So Dow Jones Industrial Average down 113%. Nasdaq is a kind of free fall, as you can see here, down 292, and S&P 500 is also a free fall, down 54 today. Futures market is opening up. I think it's not opened up well. Look, it's same as before here. So we'll wait for Monday and or Sunday evening and see how futures are doing. So with that, from a news perspective, look, we got all the major indices fell down here. Because of the worry about inflation and earning, and bank earnings show it's going to be a roller coaster year. So we got to be careful here. Great banks like JP Morgan, they're a little bit careful at these levels here, especially because of geopolitical tension. So with that, let's go in and look at the major ETF. This is a 1 year chart for the major ETF. Look, we got S&P 500 here. It's again roller coaster. It came down, went higher, went nicely higher. Now it's coming down. The moment you see market is kind of consolidating, that typically means there may be a leg down here. This is also called as a compression zone here. There's a compression zone here that tells you next leg can be down. So that's why you got to be careful here. I can see us touching, around 430 levels. That's in the cards. That's why we got to be careful. The moment you see a zone like this, which is a tight trading zone, that's when there's a good chance the next leg will be down. So we got to be a little careful about this situation here. And look, gold is also trying to see where to go here. With the dollar strengthening, gold is also struggling here. But if gold comes down, you could buy some gold slowly. It's a good hedging strategy. And then we got XLE here. Look, XLE is nicely going higher. That tells you energy is doing nicely here. So I would not chase energy, but there are moments it will come down. You could buy at the time. All right, now let's jump in and look at the ETF market. So ETFs will typically tell you where the market is going and what might happen next. So with that, let's jump in here and look at ETFs. Look, we got mother of all ETF, S&P 500. S&P 500 is still not in the correction territory, just 8.8% down from 52-week high. So I can see us going into correction territory next week. So let's keep an eye on this and buy some great stocks and go from there. And then we got QQQ here, Nasdaq 100. It's squarely in the correction territory here. Look, down 17%. All these high growth names are taking a beating. That's where we got to look at the profitable companies and buy them slowly. Financials, after the bank earnings, look, they took a big dip here. The financials are down. Look, it's down in 1 day, 5 day, 10 day, down big time. I'm slowly buying some financials, warming up to them. There are some great bargain to be bought here. And then you got a few more areas here. Look, we got precious metal, which is silver. It's also industrial metal. That's going higher nicely. RSI 60 tells you it's a little bit overbought here. I would be waiting for a pullback here. And then we got here XLE Energy doing very well. As you can see here, it's RSI 62 tells you it's also overbought at these levels here. Gold clearly doing very well here. Look at the RSI for gold. It's 68. It's been going nicely here. Folks are buying some gold as a hedging strategy. And then you got here a few other areas. Look, XLP here is also pretty strong here. Folks are buying consumer staples like Procter & Gamble. That's why consumer staples are pretty solid here. It's actually one of the solid sectors here with the RSI 70 along with the United States natural gas. Look at natural gas here. Natural gas is partying like no tomorrow. So at these levels, I'll be careful here. Look at the RSI in the natural gas here, 85. All these natural gas stocks are going nicely higher. All right, last but not least, gold. Gold is also doing pretty well here, RSI 59, but you could selectively buy some gold also. All right, now let's jump in and look at profitable stocks to buy. Look, all these stocks have got nice sales growth here. Look, sales growth is more than 10%. That tells you these companies are growing their top line nicely and appreciating the revenue. And net margin is more than 10%. That tells you all these companies are profitable. They keep the money that they make, at least a good chunk of the money. And debt to equity ratio is for most part it's less than 2. That's why many of these are great stocks, not too much debt. Stocks like Apple, even though it's got more debt, they can manage it very easily. They got some cheap debt, that's why they are managing it. And look, from an RSI perspective, all these names have got a low RSI, less than 50. That tells you all these stocks are beaten down at these levels. And look, we got 2-year and 5-year performance. Most of these names have got nice 2-year and nice 5-year performance. So that's why these are great companies doing great. But right now in the short term, they got some short-term weakness here. That's when we jump in and buy them slowly. And look, these guys have got a lot of cash here. Look at the cash on the balance sheet. All of these have got more than $500 million cash on balance sheet. Many of them much more than 500 million. And free cash flow is also more than 500 million. You don't need to worry about any bankruptcy type situation. These are all the great names here. I like the one, the free overall score more than, higher the better. There are some with little lower overall score, but all these names will work here. So with that, we'll probably highlight 1 or 2 of them and go from there. Keep watching net margin. I like the one with the high net margin. Look, top 2, we don't need to talk through them. They are very good stocks here. Apple is a good one here. You could slowly own Apple. Look at this point, RSI is 44. It's good to buy along with Google. And for the Facebook, you got to be contrarian. I like Facebook at these levels here. You could slowly accumulate Facebook. Most of the downside is already it's already in the stock at this time. I think it's slowly good to accumulate this one here. Then you got one of the great semiconductor name here, AVGO or Broadcom. Broadcom is a great one to buy at these levels here. Nice overall score. Look, they've done 220% in last 5 years and 28% net margin. Great one to buy here. And the list goes on. So we got a few one with great net margin. Look at Texas Instruments. This is a sleep at night type stock here. Look, they got a nice 42% net margin. You could buy this great company up here and go from there. And as you scan through, we got a few more here like BLK here, BlackRock, one of my favorite. Look, nice 31% net margin. You could buy this one also here. So we got one more here with nice net margin here. That's the VALE. VALE is also good here. It's also beaten down at these levels. Look at the overall score, 96. You could buy this great company also. Then we talked about Infosys. It's a great Indian stock here. You could buy that also. It's a good one here. And we got Blackstone, again, nice net margin, 35%. You could buy this great company also. And we got a few more here, CSX, and all these are railroads here, CXX and SC. You could buy these railroads here, nice net margin. All right, now let's look at a few more here. It's a continuation. Keep watching here. 1 year sales growth more than 10% and net margin more than 10%. These companies are making money. These companies are profitable companies. And look, RSI is all below 50 here. These are beaten down names, and few of them have got high short ratio, like Williams Sonoma here, high short ratio. And look, they've done great in 2 years and 5 years, at least most of them, with the exception of Zoom here, which is struggling at this time after the pandemic is over. And these guys have got a lot of cash. Look at the cash here, more than 500 billion. Free cash flow is also great. Overall score is also more than 50. That tells you all these are rock solid companies. So with that, as you look through here from a net margin perspective, look, I like the higher net margin. KLA Corporation, you could buy this great company here. Look, it's a nice 37% net margin. It's a great company here. And then you got few more here. Look, we got one more, Zoom. You could wait slightly. These guys have to make some acquisition. They have a lot of money. I think they have to grow through acquisition at these levels. That's why it's going down off late. No new catalysts on this stock at this time. And then you got few more here. You got CPRT, one of my favorite stock here. Nice net margin. You could buy this one also here. It's $116, not too much. As you scan through here, we got few more here. We got Skyworks and Teradyne. Both have got nice net margin. You could buy these names here. Especially Teradyne is a great one here. Semiconductor testing. Even Skyworks is a 5G play. You could buy them. And then you got few more here. We got CG here. Look at the CG, the margin. Net margin is 54%. You could buy this great company here. Right now RSI is 40, which is oversold at these levels here. Then you got Pinterest. Pinterest is a good one to slowly accumulate. No need to rush. This will bounce back nicely in a 6 months to 1 year time. It's good to slowly nibble and slowly buy. As you scan through here, you got one more with nice net margin here. SCHW, very low price stock here. Look, it's just $16. A nice net margin. You could buy this company here, and you will do well. Overall score 98. That tells you it's a solid company. And we got a few more here. Williams Sonoma. Look, high short ratio here. You could buy this one also here. And then you got one more very low price stock here. SID. You could buy this company also. It's a good one here. Overall score 82. And stock is sold off at this time with the RSI 50. And last but not least, we got Zim. This stock fell down a couple of weeks ago. You could still buy this great company here at a discount and accumulate. All right, so with that, thank you very much. Happy investing and trading. Please subscribe.